Tim Bigham, option strategist, Buy Alerts, is joining me. Your thoughts on example trade? I mean, this is one sloppy, messy chart since basically mid-March.
Yeah, absolutely. It's a chart that's actually starting to look a little bit bullish here, in my opinion. Certainly the stock the most oversold on a technical basis it has been in the past year. The drubbing it got post the Foot Locker announcement certainly took it down to kind of that support level in the upper 160 area. So that looks like a place where I think valuation starts to step in as well. You get some value buyers. The stock trading under 12 times on a price to earnings basis. So certainly the cheapest that has been in several years as well. So I think, as you alluded to, the earnings are kind of already out there simply because of the Foot Locker deal. So I don't expect big fireworks. Market makers are pricing at about a 5% potential move on the option prices post earnings on Dick's Sporting Goods. So I'm just leaning a little bit bullishly, more for a retracement of the recent drubbing, right? And going out buying next week's 180 calls, selling this week's 180 calls, paying under $1 for that spread. More importantly, Nicole, selling well over a 90 IV, hedging with about a 60 IV. The one thing we do know is post earnings, the IV will realign and flatten out dramatically. So I think unless, basically Dick's comes out and says something bad, which I don't see because they've kind of pseudo pre-announced, I think the stock will just continue to maybe languish to move a little bit higher here, and that's all this trade needs to do to post some decent profits.
Okay. Tell me about your thoughts. So looking forward to that and hearing more from the company. Really also, what they say, as you noted, about tariffs, the Foot Locker integration, what the synergies are, et cetera, the timing. How about the market action? How do you feel about that as we see all 11 sectors higher today?
Yeah, I think today we're getting that, if you will, tariff relief rally. We've seen tariff tantrums certainly previously. So I think we'll continue to see this yin and yang back here as ultimately the, final kind of tariffs will settle out somewhere probably around here, maybe a touch lower. Certainly the bluster is gone coming out of Washington and overseas. So there will be tariffs. The market's kind of getting to the point, in my opinion, where they're thinking there won't be any tariffs at all. There will be some tariffs. They certainly won't be at the egregious levels first put out there by Washington. But I think with the Foot Locker acquisition, Dick's Sporting Goods, it's important to kind of look at them from the tariff side a little bit more, simply because they'll have a little more exposure, certainly because of the FL acquisition, to that kind of tariff. So I think with Foot Locker, any easing of tariffs like we're seeing now will be a benefit. And I think the stock is probably just due for a pop as well. And I think the market, conversely, is probably due for at least some consolidation here. It's getting a little bit overdone. We're seeing that meme mania pop back into some of the GameStops of the world as well.
It's interesting, too, about how we just got consumer confidence here, and those were some good numbers today at a level of 98, and people didn't expect that. And we're coming off of some soft data that really showed some weakness. But as the markets came in this V-shaped recovery, people are feeling better. Amazing how sentiment and these markets can really change. I mean, we were in this doom and gloom end of the world moment, it felt like, for some folks. Less so for the investment community, but more so for regular folks that really started to get scared. And we've come up from that, and we could go back down to that, I guess. I don't know. What do you make of the sentiment and where we're headed?
Yeah, absolutely. It's a bipolar market, as you absolutely termed it succinctly there. And I think the Warren Buffett adage of buy when others are fearful and be fearful when others are greedy absolutely applies to this market, where it's one day it's the end of the world, the next day nothing's going to happen. The truth always lies in the middle here. So I think take advantage of these kind of moves here, and I would just use 5,500 and 6,000 to use big round numbers. It's kind of areas on the S&P 500. You can take a look at individual stocks as well to kind of position to be either a little bit of a buyer or trim out of some of your holdings. Just kind of play it back back and forth. I don't think we're going to head appreciably higher, but I think the lows certainly are close to being in, certainly at that 5,000 level on the S&P.
Yeah, I mean, I'm just looking at that early April chart. 48.35 was the low from 61.47. So that's why people got so nervous. Tim Bigham, option strategist, buy alerts. Great to see you. Thank you very much. Thanks for being here.
You bet, Nicole. Take care.